Welcome back to my channel. I'm so happy, I'm so delighted to welcome you once again to my channel. I've been off the screen for some time. Like I told you, I will be updating you guys with new content every Saturday. That is to say, every weekend I'm going to analyze how I trade the forex market so that you guys will understand how to trade. This is not a bullshit talk. I am teaching you trading organically, meaning that I'm going to be showing you how I place my trades, the confluences that I look into before I place my trade, and my consistency rule. That is to say, I have been using one trading system for a very long time, and this is the trading system that has been profitable to me. So I'm not that type of a trader that tomorrow I will change a strategy, next tomorrow I will change a strategy, because there are so many strategies. I only make use of the simplest trading strategy because I believe simple is the best. So from now henceforth, I'm going to be giving you weekly guides. So I'll call it a weekly episode on my trading journey. So you guys will learn how I trade so that you can, replicate everything that I'm teaching you in your own trading style. Every trader has his or her own trading techniques, right? But this is my method. This is the style that I use in trading. But if you can follow this strategy, if you can follow this concept that I'm sharing with you, you're gonna be profitable in the long run, because this strategy has you covered. So pay clear attention, make sure you watch the video from the beginning to the end so that you understand what the video is talking about. For this tutorial video, I'm going to make use of MT5. That is the platform I'm going to be making use of, because that is the platform that I use to do my technical analysis, right? And like I told you in my previous video, I trade gold, SAUUSD. That is my favorite pair, and this is the pair that I've been trading for a long time. So I trade only one pair, and that is gold. And as a day trader and a scalper, I normally use lower time frame to place my trade so as to get what a sniper entry and a better risk reward ratio, because I am a kind of person that love management. So I love to manage my money very well. I don't want to take too much risk, right? Because I know 100% sure that the forex market is unpredictable, right? If anybody tells you that the forex market has 100% probability, that person is lying, right? So I can say 80% or 75%, right? But having at the back of your mind that no strategy can give you 100% profitability. So in this video, I'm going to be sharing with you my weekly trading analysis. From now henceforth, I'm going to be sharing with you how I trade the forex market, because I want you guys to know that trading is something that you need to take our time to master. There are several trading strategies out there, but the best thing you can do is to pick out one and master it. Every trader has his or her own favorite trading strategy, but mine is the moving average. I love this moving average so much because this has helped me a lot in my trading career. Because with the moving average, I can be able to know the direction of the market. I can be able to know where the market is heading to, right? So that is why I always make use of the moving average. Some traders can use the Fibonacci retracement. Some traders can use other indicators like the RSI, like the ADS, and so on and so forth. So it all depends on the kind of trader that you are. But for me, what I use is the moving average, and that is what I teach my students, right? In my trading course, which I have sold out to so many students, what I teach them is how to make use of the moving average, because so many traders are ignorant about the importance of the moving average. So In this video, I'm going to be sharing with you my weekly analysis on how I am trading using the moving average. I'm going to share with you my live screen and show you how I place my trade, my confluences, the things that I look into before I place a trade. So if you are watching this video, please don't forget to subscribe, smash the subscribe button, turn on the notification icon to be notified whenever I update new content. And like I said, I'm very busy with trading and other things. That is why I can only post videos weekly every Saturday. So endeavor to turn on the notification icon so that you get my update whenever I upload new video. So if you look on the screen, you can see that what I'm making use of is the MetaTrader 5, that is MT5 desktop. So that is what I normally use. I also make use of TradingView, but sometimes based on my strategy I prefer using TradingView. Bear it in mind that I trade gold, SAUSD, and I am a day trader as well as a scalper, right? I'm not a swing trader, neither am I a position trader. I'm a day trader and also a scalper, right? I like to cash my profit as quick as possible. So if you want to learn my trading strategy, then you need to be a day trader, right? But if you are a swing trader, you can also master this strategy and use it as a swing trader, because I'm also going to cover swing trading strategy using this my same trading formula, right? And like I told you, how I do my trading is I look for crossover and pullback. So these are the only two things that I look into before I place a trade. I look at what? I look at crossover and what? And pullback. First and foremost, I had to look at the trading market structure, the market structure first, to know the directional movement of the market. And the moving average will help me to be able to know the market structure. So whenever price is above the 20 EMA, now if you look clearly, you can see that this yellow line is the 20 EMA, while this blue line is the 5 EMA. So these are the two things that I use to analyze the market. So with these two things, I can be able to know or guess where the market is going. I don't need any other indicator. What I need is just these two moving average, the faster and the slower. The 20 EMA is this yellow line, while the 5 EMA is this blue line. So for you to plot it out is very simple. You go to Insert, you go to Indicators, you go to Trend, and then you go to Moving Average. You click it twice. Then when it appears, you go to the setting, change the setting to Exponential Moving Average 20. Then you change the color to yellow. Then another one, Exponential Moving Average 5. You change the color to blue. You can use any color of your choice. After you have done that, it will come out like this, right? So these are the two moving average I'm talking about. The faster, which is the blue, and the slower, which is the yellow. So now we have plotted the moving average. What we are looking at now is crossover and pullback. So these are the only places where I place my trade. Bear it in mind that I'm not blindly trading moving average, crossover and pullback. I'm also combining it with what? Price action, which is support and resistance. Have it at the back of your mind that I use this moving average as my area of value, especially this yellow, right? The most important thing is this yellow. I use it as what? As an area of value, right? And also use horizontal line as my major area. Like if the market is ranging, knowing fully well that when the market is ranging, it will be crossing the moving average back and forth, just like what happened here. Something like this. You can clearly see that in this scenario, the market is ranging. At this point, the market is ranging. So for me not to get a whipsaw, I will use a horizontal line to map the lows and the highs, right? To know the location where the market gets to and get reversed, right? So if you watch, you see that this is the lows and this is the high at this particular moment. So have it at the back of your mind. This is clearly a 1 hour time frame. A 1 hour time frame, right? And so this analysis is from 1st April, Monday 1st April to Friday 5th April. Like I said, this is my weekly analysis for the week that just run out. That is what I'll be doing every week. I'll be sharing with you my weekly trading analysis, and I will show you my data, the profits that I've made, so that you know that what I'm saying here is fact. I'm not just blabbing. Now, if the market is in a range, I can use two horizontal lines to identify the highs and the lows, right? So what I will do is I will wait to see where the market is bouncing off. Like if the market bounces off from here twice, I will identify this as an area of value, which is support level. So I will use the horizontal line and mark it. And if the market gets to this high and reverse, two times, I will confirm this as what? A resistance level. And I also use a horizontal line to mark it, right? So what I will do is this. I will keep on trading my crossover, because this is the higher time frame. This is 1 hour time frame, and you know that as a day trader and as a scalper, I use the 15-minute time frame for my entering, right? So now that I've drawn these levels at the 1 hour time frame, I now know where the price can get to and reverse. But if the price eventually breaks below this level, that is a beginning of a new downtrend. And if it breaks above this level, that is the beginning of a new uptrend. So by so doing this, I'll be able to avoid so many whipsaw at the lower time frame. So when I go down to the lower time frame, like the 15-minute time frame, I will know that when the price gets here, I take my profit, right? And when the price comes over here, I take my profit. So when the market is ranging, I can buy here and sell here, right? I buy at the lows and sell at the highs until the trend resumes. And if the trend eventually resumes, I still continue with my moving average, because when the market is trending, I don't need the horizontal line anymore. What I need is the moving average, because the moving average will be acting as an area of value. In an uptrend, it will be acting as as a support level, while in a downtrend, it will be acting as a resistance level. So the reason why I make use of these two horizontal lines is when the market is trending, right? So I can never deceive you. The moving average crossover can give you so many fake signal when the market is ranging. That is where you get so many whipsaw, and this is the only disadvantage of this strategy. If the market is ranging, you get so many whipsaw, right? So the market will be crossing the 20 EMA, which is this yellow line, consistently. And if you are blindly trading using this moving average, and you are just trading based on crossover without looking at the market structure, if the price crosses below the 20 EMA, you sell. If the price crosses above the 20 EMA, you buy, right? And if you do that twice and end up in a loss, meaning that if the price crosses below the 20 EMA, you sell. The price goes a little bit, reverse, comes back again and cross above the 20 EMA, and you still buy. The price goes a little bit, then reverse back, know fully whether the market is ranging. Just two loss, you should know that the market is ranging. So what you will do is you simply go to a higher time frame, like the 1 hour, and use two horizontal lines to map the highs and the lows, knowing fully well that this is the level where the market reversed from, and this is the level where the market reversed from, right? So once you mark these levels, you simply wait for the price. When the price comes to this level, this resistance level, you sell. And when it comes to this support level, you buy. Why? Because the market is ranging, and for the fact that the market is ranging, you have decided to change your strategy by using pure price action, right? And if the market returns back to trending, you continue with your moving average. So this is how I trade the forex market. So now if you watch, starting from 1st April 2024, being Monday, the market has been in a serious uptrend. Like I said, I'm trading gold, SAUSD. This is it. SAUSD, gold versus the US dollar. So from 1st April, the market has been in a strong trend, right? So with the 1 hour time frame, we can clearly confirm that the market is in a strong uptrend, right? So what I'll do now, I'll scale down to the 15-minute time frame, because this is the time frame that I use to trade, right? This is the time frame that I use to trade, and I'm going to show you how I do this, how I trade using the crossover. So I head down to the 15-minute time frame so that you understand what I'm talking about. All right, now this is the 15-minute time frame, right? So this is Monday 1st, right? So this midnight, right? So now this is the beginning of the week, 1st April 2024. This is the beginning of the week. So if you have plotted these two moving average, the slower and the faster, it will be able to tell you the directional movement of the market. Now you can clearly see that consistently the price are above the 20 EMA, the yellow line. So for the fact that price are above the yellow line, I am only looking to do what? To buy. because if I decide to sell, the movement, the down move is very small. Like if I sell when the cross below happen, it just goes a little and the up continue. So I will only focus to buy and not to sell, right? And how do I buy? I wait for crossover, right? Now if the price makes a pullback down and then reverse and crossover, once the price crosses above the 20 EMA, I simply place a buy trade, right? And my stop loss will always be below this 20 EMA line, right? So like I said, I always use two trades. I always place two trades. One, I have a fixed take profit, and the second one, I don't have a fixed take profit. I always leave that one to be able to ride the market, because if you have been trading gold with me, you know that gold is always trending. Gold is highly volatile. It is always trending. So if you check other platforms, other brokers, you will see that gold has the same measurement. Like if you look the price of gold in other brokers, you see that they are almost the same. Like I've done the research, right? If you check so many brokers, compare them with other brokers using gold, you see that the price are the same, right? So if someone gives you a signal of gold from another broker and you place it in your own broker, it will still give you the same exact result, because all the platform, all the brokers have the same quote, have the same price quote on gold, right? So what you see on TradingView is what you see on the MT5, is what you see on the MT4 in any other broker that you wish to. That is why I love trading gold so much. The reason why I love gold is because of its volatility. Gold is always volatile. It is always moving. In a single day, gold can move over 500 pips, 400 pips, or even 300 pips. So that is why I always leave one trade for riding the trend. Because if I only focus on 1 to 2 risk reward, that is, I'm risking 20 pips to make 40 pips, I'll be limiting myself to so many profit potential, because I'm just limiting myself to 40 pips take profit, right? And if the price moves 500 pips, that is my loss, because I'm just targeting 40 pips, right? But you know, in the forex market, it is endless, because your profit potential is unlimited, right? Just as long as you respect your money management, your profit potential is unlimited. So it is always advisable that you cut your losses and allow your winning to flow, right? That is why I use two trades, right? I use one for fixed take profit and the other one to ride a trend. So if the market is ranging, the first take profit can give me the profit that I want. What I normally do is, once my first take profit is achieved, I break even, right? So the essence of breaking even is to protect my capital. In case if the price decides to reverse after hitting my take profit, it will hit my break even. So whenever I get 40 pips take profit, I break even immediately, right? But if the price doesn't return to my break even and continue heading to my direction, I'll keep on shifting my stop loss, right? So what I'll be looking at is the moving average. If the price eventually crosses below or above the moving average, that is when I will take my profit. But as long as the price has not crossed below or above the moving average, I'll be able to hold on to my trade. But if I'm a swing trader, I can make use of the higher time frame, like the 1 hour or the 4 hour time frame, right? Because as a swing trader, I will be able to hold the trade longer. Because if I'm using the 15-minute time frame, I can see that the market will cross over here, maybe here is where I will close my trade, right? But if I'm using the 1 hour time frame, let's go to the 1 hour time frame. You can see that the price is still respecting the 20 EMA. Like if I'm using the 1 hour time frame, I will hold on to my trade for this, because the price is respecting the 20 EMA. So where I will close my trade is at this point. This is the point where I will close my trade, this point. So you can see that with the 1 hour time frame, my profit will be higher compared to the 15-minute time frame, because in the 15-minute time frame, I'm a full-time day trader, so I can only close my trade when there's a crossover at the 15-minute time frame, right? And you know that 15-minute time frame can get more crossover compared to the 1 hour time frame. So it all depends on your trading style, if you're a day trader or a swing trader. So what I'm saying right now is, if you're a swing trader, 1 hour time frame is the best ideal time frame for you, but if you're a day trader, I think the 15-minute time frame still remains the best for you. So it depends on the kind of trader you are. So day traders close their trade within a day, while swing traders hold on to their trade for several days. So it all depends on the type of trader that you are. So let's go back to the 15-minute time frame. So like I say, I always look for crossover. So now if you watch clearly, you see that each time price crosses above the moving average, the trend reverses, right? So what you should be looking at is a crossover. If you check from 1st April to 5th April, which is 5 days, you will see that the price has been in an uptrend, right? So what I do is I look at crossover. That is what determines whether if I am to buy or to sell. So now if the price crosses above the 20 EMA and the 5 EMA, which is the blue line, crosses above the 20 EMA, which is this yellow line, I simply place a buy trade. So my buy trade can be somewhere here and my stop loss will be below here, and I will be able to ride this trend. And if the price crosses below, I place a sell trade and my stop loss will be above the 20 EMA, and I'll be able to get to ride this little trend. So for the fact that I'm a day trader, I have a first take profit of 40 pips. So once I achieve my 40 pips take profit, I break even. So if the price moves 100 pips, that is my lock. If the price moves 300 pips, that is my lock, right? So once I've taken my first take profit, as long as the price is still above the 20 EMA, I will still keep holding on to my trade, no matter how long it takes. But as a day trader, I will only close my trade before the market closes, maybe around 8 p.m. Nigerian time. That is the time I might close my trade, because the market normally closes by 10 o'clock p.m. Nigerian time. So once it's 8 p.m. or 9 p.m. and the market is still trending, I can just close my trade and wait for the next day. But if it's a swing trader can hold his or her trade for several days, right? I'm just telling you the style of trading. So I'm only looking for crossover. That is the criteria that I look into before I place a trade. So if you watch, whenever the price crosses below, I place a sell trade, and the price makes a pullback to the 20 EMA and then get rejected, right? I also place a sell trade, because I also include candlestick pattern, most especially the shooting star and the hammer, right? So when the price makes a pullback to the 20 EMA, breaks a little below above it, and then get rejected for me in a week, I will do what? I will place a sell trade, because I know fully well that price is being rejected at this level. So once I see a shooting star or a hammer at the 20 EMA, I simply take action, because that tells me that there's a rejection of price at that level, right? So if you watch, each time a crossover happens, the trend reverses. Like now, you see that the market was going down. First, there was a crossover here and the market started heading up. So once the crossover happens, you can either place a buy trade at the close of the candlestick that caused the crossover, or you wait for a pullback to the 20 EMA. So once the market makes a pullback to the 20 EMA, you simply place a buy trade and your stop loss will be below the 20 EMA. So your stop loss can be 20 pips, and then your first take profit can be 40 pips. Then the second one, hold until you confirm another crossover. So once you buy, you can be able to hold onto your trade until you are able to confirm a crossover somewhere here. So once a crossover occur here, you close your buy trade and place a sell trade, and your stop loss will be somewhere above here, and then you can ride this little down move. Like I said, 40 pips first take profit, and once it's achieved, you simply break even. And if the price comes back, hit your break even, you're not going to lose anything. Rather, you make profit based on your first trade. And if the price crosses a little bit above the 20 EMA, get rejected again, forming a wick, you still place a sell trade, because the down is still in progress, right? Because the price got rejected at the 20 EMA, so you also place a sell trade, right? And then the same thing, your first take profit is 40 pips, while your second take profit is you have to hold. So you can clearly see that each time a crossover happens, the market changes direction. Right, so now a crossover has also happened. The market have changed direction. So this is what I've been doing. I look at crossover. You can see this is 15-minute time frame. So I always monitor my chart every 15 minutes, because every 15 minutes this new candle is forming. Every 15 minutes this new candle is forming. So that is why I don't normally post video during the day. During working days, I only place videos during weekend, because from Monday to Friday I am always monitoring the chart, because this is what has been feeding me and my family, and I don't joke with it. So Monday to Friday I am a busy trader, day trader and scalper. I monitor the chart to look for better entry. So on Saturdays I do my weekly analysis. I share my trading strategy and how I trade to you guys every week. So have that at the back of your mind. So I always monitor my chart every 15 minutes and I look at crossover. So each time a crossover occur, I simply take action. Like now, you can see that the price crosses above the 20 EMA and the 5 EMA crosses above the 20 EMA, confirming a change of trend. So now we are looking to buy. So I place my buy trade at the close of this crossover. My stop loss will be below here, and I'm going to ride this trend. Right, so each time I confirm a crossover, I place a trade. So this is another crossover. I can place a sell trade, get my 40 pips take profit, I break even, and if the price reverse hits my break even, I'm out, but I will not lose. So I wait for another crossover, and this is another crossover. I place another buy trade. My stop loss will be below, and I'll ride this trend. Another crossover, I place a sell trade. My stop loss above, and I'll ride this trend. You can clearly see it. Now look at this. Look at this one again. This is on Friday. This is yesterday, Friday, when the NFP news was released, right? So you can clearly see this is a crossover. I place my sell trade. My stop loss will be above here, and I'm able to ride all this move. And then this is another crossover. So this crossover happened yesterday, and I placed my buy trade, and I'm able to ride this trend. So with this strategy, you can make so much money in the forex market. So right now, I'm going to share with you my weekly result. That is the profit that I made within the week from Monday 1st April 2024 to Friday 5th April 2024, so that you understand what I'm talking about. So after showing you my analysis, my trading strategy, and how I place my trade for this week from Monday 1st April to Friday 5th April, so this is the result. Like in this trade, I used $1,000 capital, right, and I risked 2%, right? That is to say I risked $20 per trade, because my stop loss is always 20 pips. So the lot size that I use is 0.10 lot size, and my stop loss is 20 pips. And like I told you, I normally place 2 trades, right? So when my first take profit is achieved, which is 40 pips, I hold onto the second trade and I use it to ride the trend. So from 1st April 2024 to 5th April 2024, this is my trading results, right? You can see on Monday I had 3 trades. I won 2 and I lost 1. So my total profit was $59 on that Monday, when there was only 2 crossover. Then on Tuesday I had 3 trades and I won 80, lost none, and then my profit was $80 and there was only 1 crossover on that day. On Wednesday 3rd April, I had 3 trades. I lost the 3 trades because there was no profit for me, so I end up with a loss of $60, and there was 8 crossover, because that period the market was heavily ranging. Now on Thursday, being 4th April, so on Thursday being 4th April, I had 7 trades, so I won 5 and I lost 2, right? So I won $200 and I lost 41. So at the end of the day, my total profit was $158, and there was just 2 crossover. So on Friday being 5th April 2024, I had 4 trades. I won 3 trades and I lost just 1. So I won $160, I lost $21. So at the end of the day, I had a total profit of $138. So after the week runs off, I made my total weekly calculation. So at the total weekly calculation, the total one was $520, which means I won 13 trades, and the total loss was $144, which means I lost 7 trades. So in the week, Monday to Friday, I won 13 trades and I lost 7 trades. That is to say, I won $520 and I lost $114 and I lost $144. So my weekly total result is $376 with $1,000 capital. In just a week, I made $376. So the total number of trades that I took for that week is 20 trades. From Monday to Friday, the total number of trades that I took is 20 trades, while the total number of crossover in that month was 16 crossover. So this is how I analyze the market, and these are my results. So this is the analysis for this week. So next weekend by Saturday, I'm going to share with you my analysis for the week next week, how I trade and my result on my profit and the things that I did on that week. That is what I'm going to share with you next week. So ladies and gentlemen, that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Enjoy the rest of your day. Bye.